OG John AG here. While everyone is staring at the silver price swinging around on the screen, something very different just happened quietly in the background. And it's the kind of move that serious money makes before the next big leg, not after. I'm talking about Kootenay Silver. On February 10th, 2026, Kootenay announced it has closed a bought deal private placement for gross proceeds of about $18 million. That's not hype. That's real cash, underwritten by real firms, going straight into the ground, specifically into two key silver projects in Mexico. Tonight we're going to break down what this $18 million deal actually is, who stepped up to fund it, why this happened now, in the middle of insane silver volatility, what it tells us about how institutions see silver juniors, and what this might mean for anyone trying to position before the next cycle move. Before we dive in, quick reminder, I don't sell courses, I don't sell trading signals. I don't run a VIP chat, and I will never DM you asking for money. I am only on YouTube, right here on John AG here, and the name is OG John AG. If you're seeing my name anywhere else trying to sell you something, it's fake. Ignore it. If you appreciate real breakdowns of where actual capital is moving in the silver space, hit subscribe, tap like, and drop Kootenay in the comments so I know you're following this side of the story, not just the intraday candles. Let's start with the basic facts of the deal. Segment 1, the $18 million deal. What exactly just happened? According to the release, Kootenay Silver Inc., ticker KTN on the TSXV venture and KOOYF OTC, has closed its previously announced bought deal private placement. Total gross proceeds, approximately $18,225. Here's the breakdown. The company sold 8,000 TSXV common shares at a price of $225 per share. This price is referred to as the offering price. Importantly, that $18 million figure includes the full exercise of the over-allotment option. That means demand was strong enough that the underwriters didn't just take the base deal, they took the extra allocation too. This wasn't some random retail placement. This was a bought deal. Cloud Securities, Inc. acted as lead underwriter and sole bookrunner. Research Capital Corporation joined in as part of the underwriter syndicate. Together, they're referred to as the underwriters. As compensation, the underwriters received cash fees totaling about $1,080,014 and 480,000 non-transferable broker warrants. Each broker warrant allows the underwriters to buy one common share at $225, the same as the offering price, anytime up to February 10th, 2028. So not only did they take the deal, they also took upside exposure via warrants for the next 2 years. Right away, that tells you something. These firms are not just clipping a fee and walking away, they want to participate if this name re-rates higher. Segment 2. Where is the money going? The release is very clear on how Kootenay intends to use the money. The net proceeds, that's after fees, are earmarked for advancing the company's Columba Silver project in Mexico, advancing the La Cigarra Silver project in Mexico, plus working capital and general corporate purposes. So this is not a financial engineering exercise. This is exploration and development capital. A quick look at the company profile section in the release. Kootenay is described as an exploration company focused on the Sierra Madre region of Mexico. It holds one of the largest junior portfolios of silver assets in Mexico. Its priority projects are in Sonora State and Chihuahua State, two prolific mining districts. The company's stated strategy: expand current silver resources, make new discoveries, push priority projects toward near-term economic development. So, this $18 million is essentially fuel to drill more de-risk resources, advance those projects toward a stage where larger players might take notice, or where the company can move them along the development curve. For silver bulls, this is a key point. While paper silver is whipsawing between $80 and $120, real money is going into the ground in politically complex but geologically rich jurisdictions like Mexico. Segment 3, the structure. Who can trade these shares, and when? Now let's talk structure and legal framework, because that matters for float, liquidity, and overhang. In Canada, the shares were issued under the listed issuer financing exemption in National Instrument 45-106, prospectus exemptions, specifically under Part 5A, and the related coordinated blanket order 45-935. What does that mean in practice? The offered shares sold to Canadian purchasers under this exemption are immediately freely tradable under Canadian securities law. No hold period, no 4-month lockup. That means these shares can hit the market right away if holders want to sell. Outside Canada, it's more restrictive. In the United States, the shares were offered via private placement using exemptions under the U.S. Securities Act of 1933. They are not registered with the SEC. They cannot be freely offered or sold in the U.S. absent registration or a valid exemption. In jurisdictions outside Canada and the U.S., the shares were also sold on a private placement or equivalent basis, with no prospectus or registration statement filed where not required. So from a trading perspective, Canadian buyers under the listed issuer financing exemption can trade immediately. Other tranches may have restrictions depending on jurisdiction and exemption used. Also important, The deal is closed, but the closing remains subject to final approval from the TSX Venture Exchange, TSXV. That's a standard condition, but it's still part of the forward-looking risk the company flags. Segment 4. Why do a bought deal now in this macro environment? You might be asking, oh gee, why raise $18 right now? Why not wait for a better silver price or lower volatility? The answer is in the dynamic between risk capital timing and project optionality. The article tells us, silver is in a structurally tight environment globally. Mexico remains one of the most important silver jurisdictions on Earth. Juniors with legitimate portfolios are in a position to leverage elevated silver interest by raising capital while the window is open. For Kootenay, raising $18 in one go with an over-allotment fully exercised suggests demand was strong enough right now to lock in capital on terms the company could live with. The underwriters took a not small fee plus 480,000 broker warrants at 2.25, good until 2028. They are positioning for a multi-year exploration and development cycle, potential resource growth at Columba and La Cigarra, and a macro backdrop where higher silver prices could translate into a higher valuation for district-scale silver portfolios. From the market's point of view, this is a vote of confidence that there is institutional and semi-institutional appetite for silver juniors. Mexico-focused portfolios are still seen as attractive exposure to the silver theme. It's not risk-free. Mexico has political and permitting risk like any jurisdiction, but capital is still flowing there. Segment 5. The fine print. Forward-looking risk. The release also includes a detailed cautionary note on forward-looking statements. They specifically remind investors that forward-looking statements use words like expected, may, will, and are based on assumptions that are inherently uncertain. These include the intended use of proceeds, the final approval of the offering by the TSXV, the ability to advance projects as planned. They also warn, many known and unknown factors could cause actual results to differ materially from these expectations. Readers are cautioned not to place undue reliance on forward-looking statements. Kootenay disclaims any obligation to update these statements except as required by law. That's standard legal language, but it's not meaningless. This is exploration and development capital, not guaranteed cash flow. The use of proceeds depends on project performance, market conditions, regulatory approvals, and broader economic factors. So any thesis you build on this kind of deal needs to respect that risk. Segment 6. How this fits into the bigger silver story. Why am I spending this much time on one $18 deal? Because this is where the paper silver story and the real-world silver story intersect. On the paper side, we have wild swings between $75, $80, $100, $120. We have leveraged funds, short squeezes, and macro headlines. On the physical and project side, we have companies like Kootenay raising hard capital to drill and expand resources in Mexico. We have underwriters willing to front the cash in a bought deal because they believe they can place the stock and potentially profit from warrants. For silver bulls, moves like this increase the optionality in the sector. More projects advancing, more ounces being defined. Expand the universe of potential M&A targets for larger producers in the future. For traders, this deal adds liquidity and float in a specific name, creates a price reference at $225 for both stock and broker warrants. For investors, it's a marker. Capital is not fleeing the silver junior space. It's selectively backing companies with scale portfolios in key jurisdictions. Segment 7. What to watch next. If you're going to follow this story, there are a few key things to watch. TSXV final approval. The closing remains subject to TSX Venture Exchange approval. That is usually a formality, but it's still a box that needs to be checked. Trading behavior of the new shares. The 8,001 shares issued at $2.25, especially those freely tradable in Canada under the listed issuer financing exemption, can create short-term selling pressure if some participants flip, or strong support if buyers step in around or above the financing price. News flow from Columba and La Cigarra. This raise is explicitly to advance those projects. Watch for drill results, resource updates, technical reports, any moves toward economic studies, silver price environment. If silver stabilizes at higher levels, juniors with large portfolios can get re-rated. If silver crashes and stays low, exploration capital becomes more scarce. Segment 8. How to think about this as a viewer. If you're watching this channel, you're probably somewhere on the spectrum between trader, looking for volatility and moves, investor, or stacker, looking for exposure to the long-term silver theme. A financing like this is not a trading signal by itself. It's a context signal. It tells you where smart, risk-tolerant capital is still willing to write checks. It highlights which jurisdictions and project types are still in favor. It shows you which companies are positioning themselves to be relevant if silver's structural bull case plays out over the next few years. Your job is not to blindly chase every financing. It's to understand which names have real projects, real balance sheet strength, and a real plan for the cash. This raise gives Kootenay a stronger balance sheet and a shot at converting geological potential into defined ounces. Segment 9. In-video call to action for your channel. You're on John AG here. I'm OG John AG. If this breakdown helped you see beyond the spot price and into where the money is actually flowing in the silver space, then hit subscribe if you haven't already. Tap like. It helps push this video to people who care about real analysis, not just noise. Drop a comment with Mexico Silver if you want more coverage on Mexico-focused silver plays, and tell me which ticker you want me to look at next. We're going to track not just the price, but the capital flows, the financings, the projects, and the policy shifts that shape the future of silver. Segment 10. 3 key takeaways, and we're out. Let's wrap this up. Number 1. Kootenay Silver just closed its 18,002.25 bought deal private placement, selling 8,001 shares at $2.25 and fully exercising the over-allotment option, with Red Cloud as lead underwriter and research capital alongside. Underwriters took over $1 due, so $8 in fees, and 480,000 broker warrants exercisable at the offering price until February 10th, 2028. Number 2. The net proceeds are earmarked to advance Kootenay's Columba and La Cigarra silver projects in Mexico, plus working capital and corporate needs. Kootenay describes itself as holding one of the largest junior silver portfolios in Mexico, focused on expanding resources, making new discoveries, and moving priority projects in Sonora and Chihuahua toward near-term economic development. Number 3. The financing uses the listed issuer financing exemption in Canada, meaning the shares sold there are immediately freely tradable, while U.S. and other jurisdictions rely on private placement exemptions with restrictions. The deal still requires TSXV final approval, and the company emphasizes that all forward-looking statements, including use of proceeds and project advancement, are subject to significant risks and uncertainties. Do your own due diligence. Exploration is high risk, high variance, but when you see 18 knowers get written into a silver junior in the middle of a volatile metals market, it's a signal worth understanding. I'm OG John AG. This is John AG here on YouTube. If you want more deep dives into real capital moves behind the silver headlines, hit subscribe, drop your favorite silver junior in the comments, and we'll keep tracking where the smart money is going. Time will tell which of these names actually turn rock into cash flow, but we're going to watch every step of that process together.